welcome to Prime Property, your weekly real estate reckoner. Here are the headlines from the week gone by. The Realty Index shines this week, is up 7.42%. Strong rally seen in stocks of troubled realty firms. HDIL puts on 18%, DB Realty 12.6%. MVL is the top loser, down 6%. Ahead of state elections, the Delhi government is planning to double the FAR of group housing projects in select pockets of the city. Move aimed at reducing exorbitant prices. Mumbai's commercial real estate market has been battered out of shape, but that's not stopping Godrej Properties from launching a new project in Bandra Kurla complex. Hopes to rake in 4,000 crore rupees. Now you've heard plenty on the high property prices in New Delhi. Enough has been said on how prices in the national capital are sky high thanks to a shortage in housing. In fact, that is what has helped in the successful mushrooming of suburbs like Gurgaon and Noida. Now, ahead of the state elections in November, the Delhi government has finally decided to do something about this. The state-owned Delhi Development Authority, or the DDA, will shortly come out with a new policy doubling the permissible built-up area for new group housing projects. To put it simply, these new buildings will be taller, maybe going above 12 floors. This, as the proposal, is to hike the FAR, or the floor area ratio, from 200 to 400. As a commercial real estate, the proposal is to hike FAR by 66% to 250. But all of this will not be for all of Delhi, but only for pockets of new urban areas being planned out by the DDA. For example, in new urban extensions beyond Rohini in West Delhi, ahead of Dwarka near the airport, and even the Chhatarpur area, which is normally associated with Delhi's sprawling farmhouses. Taller buildings may also be permitted within 500 meters of Delhi's metro corridor.
The main objective of the government in here is how to cater to the large population, and the population has been increasing in Delhi NCR region, and how to really bring prices down. So the thought process is correct. The only way the prices can come down is if the supply is increased, people get better facilities to live in, the quality of life improves. However, infrastructure needs to be augmented. What I'm picking up is they'll be done in different locations, they'll have a different FAR norms. Very, very difficult to say what will come later on, but it seems like they would increase FAR, allow more. It won't be square feet, it will be really what is the total construction allowed in a land, and it will not be across the city, it will be in some pockets. However, there is talk about that across the city they may allow, for example, one more floor for every residential apartment, residential house. So it will be a mixed bag.
But for all of this, new land will be needed. It's finally dawned on the Delhi administration. It needs to put in place new land acquisition norms to successfully expand the national capital. So a new land pooling policy is on the anvil, and the real estate development will be by private players. The state will allow farmers and landowners to pool in their land. The private developer will come up with a master plan for that land, a master plan that will need the DDA's approval. And to incentivize land pooling, the original landowners will get back an equitable portion of the developed group housing, office space, etc. So with this, the Delhi government will also do away with the cumbersome process of changing land use, let's say from agricultural to residential. It's ambitious, but will it work? Will this brainchild of the Delhi government help in reducing property prices, or will it just lead to more traffic and infrastructure chaos?
This is certainly a very good idea because the only way to bring the prices to competitive levels is by increasing supply. However, infrastructure has to be looked at. If it is done blindly, this will cause more problems to the city. Anywhere else in the world, when this is done, there are traffic studies done that what will happen to the traffic. Do we have enough power, water, parking, roads? So this is definitely required, but the infrastructure needs to be augmented on urgent basis.
Honestly, don't really see a negative impact on the pricing because I think there is a lot of pent-up demand. So essentially your additional supply should cater to the pent-up demand, I mean, rather than really having a negative impact on the prices. It may lead to a bit of a decline in terms of activity in the suburban location, So if developers continue to sort of be a little rational with respect to pricing in your peripheral locations, I don't even think there will be a negative impact as far as suburban locations are concerned.
Before finalizing the new land pool policy or the higher FAR, the DDA plans to invite public comments. So do your bit. Whether you live in Delhi or not, it is your national capital. The finance minister in the union budget announced an additional 1 lakh rupee exemption for a 25 lakh rupee home loan for first-time home buyers. But does this change anything for you on the ground? How many projects are really even out there in that price bracket in the big cities? We put Cushman & Wakefield and CB Richard Ellis on the job. Time for our first pricer-meter. Forget New Delhi. You will have to go to the suburbs. CBRE found us these affordable projects in Ghaziabad at 2,000 to 3,600 rupees a square foot. These projects at Noida's Yamuna Expressway have small 1 BHKs and 2 BHKs. We've managed to identify 2 projects in Bangalore, though the Tata Housing one is about an hour and a half away from the city centre. TVS Motors has forayed into real estate and is decided to do so with affordable housing in Chennai's outskirts. Mumbai's construction tycoon Shapurji Palanji has a project in Rajarhat, the upcoming outskirts of Kolkata. Now, these are just a handful of projects that CB Richard Ellis found for us in the big cities. But the question is, if you aren't an end user, is this segment of real estate an attractive asset class? Also, don't forget, the additional 1 lakh rupee tax rebate is only for first-time home buyers and therefore not applicable for everyone.
I'll certainly recommend people to invest in this asset class, especially in the tier 2 and tier 3 cities, because of 2 reasons. One, there's limited supply, and number 2, there are limited opportunities to invest for these, especially in these tier 2 and tier 3 towns. If you are, buying into, let's say, 4 or 5 units, if you are a HNI, then just managing this, the paperwork and everything is a lot of work.
For anybody who's looking to invest for the first time in a house, it could be either for end use or investment. I think this opportunity gives you, this new rebate gives you a great opportunity, and it should be leveraged by people. I would not say that you will only have your emerging developers in these locations, but if that is the case, then it's important to actually get more information from the developer pertaining to funding. So one should be able to understand the source of funding. The other is if the development is actually being funded by your financial institution, then one can avail information from there as well.
Cushman & Wakefield got back to us with project in suburbs. This is our second pricer-meter this week. Mumbai and affordable housing don't go hand in hand. You will have to go out into the far-flung suburbs of Thane and Navi Mumbai. So we found these projects for you guys. But should you invest in Navi Mumbai or Thane?
I would say Thane is more promising, looking at the connectivity. Navi Mumbai, yes, in times to come, which is say in the next 3 to 4 years, because the prices have appreciated there quite a bit.
The National Capital Region, including the suburbs of Noida and Gurgaon, is often called the speculators' market. While there's plenty of pent-up demand, investors are always blamed for the kind of price appreciation witnessed in this market. These are the few projects shortlisted.
Developers are actually trying to now do developments which are which entail sizes which are smaller and are more affordable. So one can look at locations in New Gurgaon, which are the new sectors. One can also look at locations like micro markets such as Greater Noida, where the markets, where because of the supply there hasn't been actually that kind of an appreciation.
Down south in Bangalore, Hebbal is seen as an emerging hotspot given its proximity to the airport. While it's not all from end users, there's been plenty of activity here. Nevertheless, given the upcoming infrastructure, it is being viewed as a safe bet.
Currently, it's more an investor market. So all the new projects which one has seen, which is like the likes of Embassy or your RMZ Latitude, I mean largely the interest is coming from investors. So the vacancy or the occupancy levels, the occupancy levels continue to be a little low in Hebbal.
And Hyderabad has just not done well in the residential market. It's seen as an undervalued property market on account of all the political volatility.
If we were to actually compare Hyderabad and the peripheral locations vis-a-vis the other metros, it's one of the most rationally positioned in terms of pricing. So as an investor, if one has to take a position and has a view of about 5 to 7 years, then it would be a good bet to invest in Hyderabad.
In the West, Ahmedabad has seen a lot of supply, including from big guns like Adani and Tata's. Experts say rational land pricing attracted developers to the city. However, prices have not appreciated like in the other metros.
Ahmedabad is largely seeing traction of either from NRIs or else from Bombay, because people who can't afford to buy properties in Bombay and are looking to park money in real estate are looking at Ahmedabad as an investment destination. But up until the time one sees domestic consumption, one can't expect the kind of price appreciation one would, like other cities have witnessed.
In Kolkata, Rajarhat and EM Bypass qualify as locations for affordable housing. Prices though have taken a beating due to oversupply. An upside in prices is though expected over the next 3 to 4 years.
Both these locations have seen good supply. They've also seen supply from developers outside the city. So there are a lot of local developers who are developing. There are also developers like the likes of Unitech and DLF who've done residential developments.
For affordable housing to really take off, developers will have to brace themselves for lower margins, but even the government will have to chip in and do its part with policy and tax incentives. And the high cost of debt is another crucial roadblock. But that discussion we'll leave for another day. Time now though for our deal street. Hindustan Unilever has put several of its properties on the block. It's called for bids of an 855 square feet apartment in the Olympus building at the prime Altamount Road. Also on the block is a 2 BHK in Cuff Parade. Besides these 2 apartments, HUL has invited for bids for another 11 apartments in Mumbai on a as-in where-is basis. HDFC Realty and Cushman & Wakefield have the mandate. DLF's board has given approval for an institutional placement program or IPP. The company is planning to offer a fresh equity of nearly 8 crore shares and hopes to raise $500 million from the exercise. Reports suggest Aditya Birla Group's real estate fund is close to buying 50% into Peninsula Land's 30-acre township in Pune for 115 crore rupees. Hindustan Motors may monetize its land to cut debt. The plan is in early stages, but the company has around 400 acres in Uttarpara and 175 acres in Chennai. That's the time for a break here on Prime Property. When we return, we touch base with Pirojsha Godrej of Godrej Properties. We'll ask him why is it that the company has decided to launch a brand new property in Bandra Kurla complex at a time the Mumbai commercial real estate market is subdued.